Hi friends, my name is Menil. I am from Dealmoney Research Desk. So today we have come out with a coverage on FMCG sector. So we have seen that FMCG, we know that FMCG is one of the most defensive sector when the economy is in a downtrend or going through a recession. Recession lane. There are many stocks which are trading at an attractive valuations, and recently we have seen that there has been a corporate tax cut and also GST slab has been revised. So this is indirectly benefiting the FMCG sector, and this would impact FMCG sector in a very positive way. So we have seen that the economy is going. We see that economy is going through a demand crisis, and the demand is not picking up. And to revive that demand to the same pace and at same level, the company has been reducing the size of the packaged goods so that it can be accessible to like a wider population, especially in the rural areas where the FMCG company derives their revenue by approx 40%. Secondly, we see that there has been a liquidity crisis for quite some time, and it has also impacted FMCG on their working capital management. Vendors are taking more than usual time for clearing their balances, which has impacted the working capital management and also the inventories. Third thing, we have seen that there has the companies to revive the growth, to revive the demand. Company has gone through a cut in their product portfolio by as we see that HUL has taken a decision of cutting its prices in soap segment by almost 4 to 6%. This is only to revive the growth, and maybe their margins would have gone a bit lower, but coming back to the corporate tax, this might give a comfort because company would be having a good like a tax reduction in the tax surplus, which would be giving some comfort on the cost side. So also there has been revision in the GST slab, like I said, from 23% to 18%. So those items were mainly the daily use items like soap, detergents, toothpaste. So this is an initiative that usually during the cycle of downtrend, there is the per capita consumption from the consumer end reduces, which impacts the demand, and getting a cut on the GST will boost the demand from the consumer end. So now we have come with two of our best picks, that is HUL and GlaxoSmithKline Consumers. So HUL, as we know that it has a wider portfolio, and it has given a good quarterly performance, and the top line has grown by around 6.6%, out of which consumer business has grown with a volume of around 5.6%, and margin expansion can be seen by lower operating cost, and also some cost saving measures that the company is going through, and and also the product mix that can give some comfort and a stability to the margins. We recommend HUL at the current price with a target of 20 to 2200. Coming to GSK Consumers, we know that it has a wide range of product portfolio. It has in food, in food it has Horlicks, Malto, and other couple of things, and it also has in pharma. It is also present in pharma and like it has Crocin, and also it is in oral care. It has oral care. It has Sensodyne. So considering the wider range in the overall necessity requirement of one's daily routine, we see that there has been a cost trend that is reversing. Milk prices have gone up. Barley, which is a raw material, the prices have gone up, and margins would have been dented because of this. But the corporate tax cut, which has come as a savior for GlaxoSmithKline, on at least on the margin front. Also, it has grown its footprints by 13%. So reaching, it will have a greater wider access to the population, which will aid its volume growth in the coming quarters. We recommend a buy on the GSK consumer with a target of 9170. Thank you.